the index isn't moving at all. That has been the story of the entire day. In terms of stocks on the move, the pressure on ICICI Bank has actually been telling. Second day running, there is some profit taking that is underway on that one stock, still in negative territory. Whereas the divergence between Infosys and TCS is also quite an interesting trend of the day. Pull up TCS, good trends here. Pretty much the day's high, I think, on this stock. And that's Infosys. Infosys still negative, still struggling. TCS has had a much better session today. Yeah, big spike coming in, days high on that stock. More trading ideas for you. Then Sandeep Wagle is joining in. Good afternoon, Sandeep. What stocks are you going with today?
Afternoon, Survi. I would be a little bit on the selling side. I have two sell ideas. A sell in a Vocart, just given a breakdown, stop loss of 489, target 462. And a sell in a M&M Finance, stop loss of 428, target 408.
All right, Sandeep, thanks a lot for those trading ideas. Ms. Tulsian, your thoughts on the market reaction to Indigo's numbers?
See, Anuj, probably the positive bottom line, has really cheered the market. And going forward, I don't think that if you have the crude remaining at a level of about $60, $62, that will seem quite positive. So maybe one of the shocker which company had posted in Q2 is seen having, and the kind of destruction which you have seen in the valuation. So yes, at the current level, things are looking positive, and maybe if the jet issue continue like this, probably that will be giving an advantage to the Indigo. So maybe considering the results and mild increase in their market share, is seen positive for the stock, and hence the positive call can be taken on the stock.
Okay, Mr. Tulsian, your thoughts on an interesting stock, PVR. It's had a great run. The quarter has been a blowout quarter. I don't think there's anyone can fault revenue, whether it's profit, margins have expanded. And yet, of course, today it's not excited. Is it just because of the run-up? Would you look at buying Indigo? Would you advise buying it? Or PVR, I beg your pardon, not Indigo.
See, Surbi, yes, the results are seen to be quite good, and 40% increase in the bottom line, or maybe in the PBT also. But the problem now with this all multiplexes that they have stopped giving the exhibition and the food and beverages revenue separately, and that is in fact it's difficult to take a call, because they have shown the food and beverages expenses of about 70 crore for the quarter I'm referring to. So what kind of EBIT we should really expect from that, and if you take that, make any kind of guesswork, then probably the core operations are still seen to be not making any profit. But you have to go by the overall numbers, where 40% growth is seen to be quite good. And but the only problem is that if you have the same kind of growth seen visible, though the fortunes of all these multiplexes depends on the success of the hit films coming in, and we have not seen that happening. The low budget films are doing well, maybe like Uri, Andhadhund, or these kind of films, while the other big budget films are seen flop. So if you have the 40% growth seen expected for the FY20, then you can give a 40p multiple to the stock price. Otherwise, we find the valuations will be a little stretched in spite of the good numbers having shown by the company.
Okay, fair enough. Well, it's a big move in Apollo Hospitals. It's been just a one-way rally in Apollo Hospitals ever since it broke that 1,000 mark. In fact, it's made so many entries in top 10 as well. Surabhi, it's just Prakash, how do you look at a stock like this one? For many years didn't do anything, but now consistently moving up.
No, so I think while it wasn't doing much, the valuation didn't go up and they were capped. You had a little bit of that EPS accretion that kept on gradually inching up. And at some stage, things start looking much more attractive than all that while that they've not been. And one of the key reasons, Anuj, has been a re-rating in this entire sector. Ever since Fortis got out of the reckoning, I don't see Fortis in any respectable portfolio today. The rest of the pack is too much of a long tail, so if you were to take an exposure to the healthcare and particularly the hospital segment, you had to move into Apollo. So from that under ownership, what happened to Reliance about a year and a half back, or what happened to Biocon when it was, ages back when it was about 240, 280. I think this happens to all stocks in the journey, and I think this is just a beginning. If you ask me, this new healthcare policy by the government has made it very difficult for hospitals to expand, and especially greenfield projects. So the ones that are existing are consolidating by buying out a lot of these small unviable ones, and that could give them a huge leg up. So I'm quite positive in Apollo Hospital, and that's the call that's been for about the last 2.5, 3 months, ever since this breakout you mentioned about. I think it could still do about 10-15% up before we are through with 2019 itself.
Okay. By the way, the mid-cap market is definitely really under pressure today. There are lots of stocks, big names that are falling and falling quite a bit. You have, of course, some of the result disappointments that are playing out. Like Canfin Homes would be a case in point. But other than that, I mean, look at what's happening to a Bharat Forge, to Motherson. Ashok Leyland is down to 85, fresh 52-week lows on that stock. So loads of selling on quite a few names in the mid-cap basket. Okay, that's the shape of the broader arena. But let's get back to the large-cap space. Mr. Tulsian, before we let you go, now what is the takeaway from Bharti Infratel at the end of this quarter? There was a lot of anticipation, smart buying picking up in the stock in January. Now when the results come in, there's a lot of profit taking. What next?
See, if you focus only on the numbers, I think numbers are seen to be quite good. But I think that the weakness which has come, maybe because of the Sunil Bharti Mittal's statement that they will be looking to monetize their stake in the merged entity, which will emerge maybe in the April and June. And if you see the results having presented where they have given the results of the merged entity also of the Indus, that is also, seen to be giving a very good picture. I agree that, you have the apprehensions of the tenancy getting cut, Jio, tower monetizations that will also be giving competition. But if you see the overall metrics for the Q3 numbers having posted by Bharti Infratel, so the stock is seen to be quite cheap. And I think that once the merged entity will emerge with tower of maybe about 1,50,000, 1,60,000, that will make the company to be big, quite giant. And as I said that, one can see the merged entity numbers also in the footnote which the company has given. That is also giving quite a lot comfort, So we are in fact keeping positive view because the institutional appetite is seen to be quite high, because existing, if you see, the institutional investor stake is seen to be quite high, which will continue to be like that. And that is giving a very good investment opportunity maybe at the current levels after seeing these Q3 numbers.
Okay. All right, Mr. Tulsian. Good talking to you as always. Thank you for taking out the time, sir. We will again chat with you tomorrow about the market and all the stocks. Right now, it's time to move to an exclusive story that our colleague Nisha Poddar is tracking for us. And it seems there is a development in the long speculated move within Zee Entertainment. Are promoters looking to sell out? Is there interest coming in from global giants? What is going on? Let's ask Nisha Poddar. Nisha?
Thanks for that, Surbhi. Of course, sources with direct knowledge have told us it's still early days for a deal in Zee Entertainment, but the new entrant which has really evinced interest right now, we are picking up from sources with direct knowledge, is Sony. And remember, it's a Japanese multinational company with huge amount of presence in the Indian broadcast space as well. In fact, India is one of the only meaningful geographies for Sony, which operates in Sony Entertainment as Set India, Sony Entertainment Television, and has the only region where they are big in broadcast. So looking at a bigger pie when it comes to the broadcasting business of Sony in India, Sony is in talks to buy a stake in Zee Entertainment, which has been put on the block. Part or whole, we'll have to see how the deal really progresses. Apart from Japanese firm Sony, we also gather that American firm Comcast, which is also global giant, is also been interested in this particular race. And apart from that, some of the investors that we have seen in India from Chinese firms like Tencent as well as Alibaba, are also looking at this particular transaction, which is live right now. Apart from that, Amazon would be also interested in OTT or over-the-top services that Zee Entertainment has to offer. So it is really turning out to be a large global transaction, but definitely Sony, which had lost out, remember, to buying out Fox overseas, which operates Star here in India, is looking at a big play through Zee Entertainment.
All right, Nisha, thanks a lot for that. Well, just to put a few caveats on table, this deal is, going to take time, like we, keep saying about Zee Entertainment, Surabhi. I think the whole price dynamic is quite interesting to me. The way the stock has reacted. Just pull out the last 3 or 6 month chart on Zee Entertainment, and you would see that. It's been a very curious case. It's perhaps the only case where the promoter has come out and in openly said that okay, I'm putting my
going to sell
stake on on block. And before that, if you see the price action, it fell from 600 odd all the way down to nearly about 400 thereabout, and a lot of promoter shareholding, I guess, is pledged. So let this deal happen. Anyone who wants to chase this story, let this deal happen. I think then it will be a cleaner play, because it's going to take time. It's not happening anytime tomorrow. A story that Nisha is of course picking up is that there are more and more players joining the race. For example, Sony now. But if you're thinking that this is going to happen next week, no.
Absolutely, and I think pricing is going to be an interesting thing to watch out for as well. I mean, when a deal like this gets done, it might be a great franchise, good assets, but the stock price has really come off substantially. So at what price does it finally get done? When does a new buyer come in? Those are questions. Let's see when we have the answers.
Yeah. Prakash, your thoughts on this one? Z?
No, I'm quite amused with the kind of stuff that's happening, and I completely echo your sentiment that nobody really has a clue first what was the key driver or the imperative for the promoters to exit, and if they do, what is according to them a good level. So what's happening is a lot of suitors. I think it's a question of getting the price discovery right, or whatever, the mechanism of the price discovery process to be set rolling. But, I would play Z as a trader, and my trade would be very simple. Every time it gives you these bursts of energy, you book out, and every time it kind of, falls by the wayside, you pick it up. There's no other rationale to it, because the business, which we've already seen numbers come from, is being driven by a lot of others. So if they were to sell different parts of the business, they could probably make more money. But as a whole, it's very difficult to judge. And I keep on saying the OTT platform for some of the pure OTT plays like Balaji, is far more promising, far more clear where it's headed in terms of the segmentation, and also, if you have to bet long term, I think I would pick up something much smaller and safer. But otherwise, it's a great trading play.
Okay, Prakash, stay on. We just want to hold you in case we have Yes Bank's number, and I would want your reaction as well. But for now, as we count down to the weekly options expiry, the Bank Nifty is back below 27,200. It can get very interesting. We have Pramod Gubi, co-founder of Marcellus Investment Managers, now joining us. Pramod, hi, good afternoon. So, my coffee intake has gone up of late. Commenting on this kind of market, but it's been very range bound, stuck in this band for some time now. Your thoughts of late? Mid caps have again started to underperform. How are you looking at the overall scenario?
I think it's going to be a tough time for those who are taking a short-term view on the markets, because the number of variables at play are just simply impossible to track, and some of these are either non-linear in nature or unprecedented in nature. Particularly liquidity, which has been a big driver of the markets in the short term over the last several years, that's taking a dramatic U-turn, right? So the sort of tightening or quantitative tightening we've seen from the Fed so far is reaching $50 billion a month. And we've also heard the ECB stop buying fresh bonds. We've also heard the size of the QE from the Bank of Japan also reduced. So at a time when liquidity in asset markets globally is coming off, you're seeing parallelly trade wars picking up, which will also have its own ramifications in terms of capital flows as well as trade flows. So these are fairly unprecedented times in terms of even understanding the impact on the markets and the economy is concerned. So for those who are willing to bet on markets in the short term, it's all the best, really. The only way out is look bottom up, buy fundamentally strong companies, where it's easier game to predict earnings of companies which have got franchises, assets, brands to back, and stay invested for the longer term. I can't see any other way to look at markets these days.
Well, even there, Pramod, I mean, I take your point. The index isn't doing much. You've got to focus on stocks in the portfolio. But even here, there's a lot of churn that's going on. For instance, something that you could buy blindly. For instance, the old adage, buy growth at any cost, that is getting challenged now. A company like Pidilite, where there's a margin compression, I mean, their questions are being raised. Even for ITC, for that matter, where there was a minor miss on cigarettes. I mean, the stock was badly punished yesterday, some recovery today. So from a portfolio standpoint, how are you looking at the consumer space, staples as well as discretionary?
I think the consumer space is still one of the few spaces where you have some visibility. You may not have the roaring growth that we were seeing in terms of north of 20%, but at least it's still the only space where you have some visibility of growth. And in a country of 1 billion plus people with the sort of demographics we have, it's hard to see how consumption will wane as far as the underlying earnings growth driver is concerned, especially given the sort of companies that we have in this space. They have brands and distribution to back. There's a fairly sustainable competitive advantage, and playing into the broader macro demographic theme, you might err on the side of buying fully valued companies, where at least you won't be disappointed in terms of massive disruptions as far as earnings growth is concerned. So I would think that both staples and discretionary offers some of the better opportunities for the long-term investors, where there's some structural stories to play.
Okay, CBI has registered a case against Chanda Kochhar and her husband Deepak Kochhar. Of course, keep in mind Chanda Kochhar is no longer with ICICI Bank. So in that sense, perhaps ICICI Bank is a bit insulated. But of course, what we're talking about is our events when which happened when she was the CEO and MD of the bank. So there's a bit of a reaction happening on ICICI Bank. But the big story on ICICI Bank actually has been the re-rating after Chanda Kochhar has left. So,
no, absolutely.
So in that sense, my thought process is that perhaps going forward, you'll have a result which will be important. But
it's a little curious though, Anuj. I remember when we were discussing this last 2-3 days. I'm not saying it's related at all, or not trying to suggest or imply anything. But last couple of days, after its stellar performance, ICICI Bank was a little on the back foot. It kind of underperformed throughout this week, actually.
That is always going to be the risk that what kind of skeletons would come out, right? But at the end of the day, this is of course about the ex-CEO and MD of the bank. But yes, for now, perhaps this is the reason that the one-way rally that we had in ICICI Bank has sort of stalled a bit.
Yeah.
That of course is I think a valid point. Lata is breaking this, of course, so she is now joining us. Lata,
no, the news is being broken by Parikshit, and we will have him on air in just a minute. He is with his CBI sources. I was just going to say what you just said, Anuj. This is of a case of a prior period, and a lot of people who were important in that credit committee, etc., are still there in various positions of power. So I don't know if this case will go away that quietly. If a case is gotten registered, we still don't have Justice Sri Krishna's findings. And if there's something registered by the CBI, I don't know if that will influence Justice Sri Krishna's findings or his investigations. This is not a happy development at all for the bank, because it may not stop here. Further governance questions will come as to if all this was known. Why was the credit committee not more alert, or why did the credit committee not force Chanda Kochhar to recuse herself from those decisions? So some of them are still working in ICICI. And then at that time, if I'm not mistaken, it was Mr. K.V. Kamath who was chairman of the credit committee, and Chanda Kochhar was one of the members of the credit committee. So this has its tentacles. There is definitely a reputational damage.
Okay, sure. Fair enough.
Whether there will be further damage, we don't know. It will depend on exactly how the
investigation.
CBI. See, this is only a case registered. It's not proven. And therefore, Justice Sri Krishna will take that also on board. In any case, it's an unfortunate development, and as you say, it may not stop here.
Okay, by the way, the Bank Nifty weekly options expiry play has started, and it's now broken. Perhaps this news has had an impact on the stock. Pramod, your thoughts? How are you positioned on, say, a stock like ICICI or Axis Bank, and the corporate banks in general, and ICICI Bank in particular?
Well, we have no exposure to either of them. But speaking from an investor's perspective, I think it does bring a lot of uncertainty. Just when you thought that the troubles of the asset quality or the NPA stress is behind you, this adds a different level of uncertainty from an investor standpoint. And unless those things are clear, because like Lata said, you don't know how much of it remains in the bank that's continuing. The market was looking forward to a complete reset under the new management, under the new CEO. But this will just raise some concerns, and investors would prefer to wait it out rather than take the plunge.
Also, these stocks had become the market's poster boys when corporate banks, Axis and ICICI really were the trade of the last several months. I think we have actually Parikshit with us, so let's just get some more details in. Parikshit, this is an important development that you are picking up. Tell us more, please.
Well, for several months, we know that key people in the ICICI loan fraud case have been examined. They have been questioned, and scrutiny of documents has also happened. There were raids that took place earlier as well, but probably this is the most definite development that has happened so far. A first information report being registered in the case, and against Chanda Kochar, Deepak Kochar, and VN Dhoot as well. This is what the CBI press release says. This is on record. The case has been registered under sections of cheating, read with criminal conspiracy. So they're saying that all these people entered into a criminal conspiracy to cheat ICICI Bank. I'm going as per the statement of the Central Bureau of Investigation. They've also added that they worked fraudulently. Loans were given to companies in a way to cheat ICICI Bank. Searches are being carried out in Mumbai and Aurangabad. I'm told we're expecting more details in the next couple of hours. There will be a formal briefing by the Central Bureau of Investigation as well. What will be the next step? Are they going to be summoned for interrogation? Sure. That is something we'll have to now wait and watch.
All right, Pratikshit. Thanks a lot for that quick take on ICICI Bank. Before we move on, I think we are expecting Yes Bank's numbers very soon, so we'll get busy with that. Before that, Pramod, IT has made a big, it was the last year's big mover and continuing this year as well. Your thoughts on large cap IT in particular?
I think IT is still one of the better places to be in the market, given the sort of liquidity tightening that I was talking about. I don't see any reason how the rupee will come back. If at all you were to take a call on the rupee, it would be for further depreciation, unless and until we see a dramatic impact of the liquidity tightening in the trade wars on global economies, where the Fed and other central banks take a U-turn in terms of the decision to tighten. So given that, I think IT is still one of the better places to be in, and fundamentally as well, I think the sector has done well in terms of investing in capability building, and that should also bear fruit over the next 12-24 months.
I just quickly want to point out 2% on gross NPA for Yes Bank.
I'll tell you one thing. Thanks a lot, Pramod, for joining us, because now we'll get really busy with the Yes Bank's numbers. Don't want to hold you. I think the really big news on Yes Bank is the announcement on the CEO. I think do we have that? Yes. So
that you have to wait for whether there was anything in terms of the RBI's annual inspection. And more importantly, whether Ravneet Gill is indeed announced as the CEO. Both could be important.
Yeah, I think Ravneet Gill has been announced the MD and CEO of Yes Bank with effect from March 1. That's the big breaking news that we have at this point in time. It was expected that perhaps it will happen. 2 names were sent, 1 external name, 1 internal name. It was likely that RBI will approve that one big name, and it's Ravneet Gill. And what's that done is that's led to a massive amount of short covering on Yes Bank, because you had a lot of shorts in the system, and as soon as the 200 mark was crossed, you've seen a big move happening on the stock. So Ravneet Gill, in fact, is the MD and CEO of Yes Bank. That removes a big part of uncertainty.
1 minute, since we have Pramod with us. Pramod, will this be seen as a new beginning where a past would be cleaned, or do you think it's just best to climb on the stock now?
No, I think one should wait. One should wait for...
some kitchen sinking possible, you think?
Possibly, but at least to come and understand, let the new CEO come in and talk about what he thought was happened in the past, and demonstrate in the first few quarters of results, or even articulate a completely new strategy as far as positioning of the bank is concerned. So I don't think there's any rush to pile on the stock just yet. If it indeed is a good story, you will have plenty of time to play this over the long term.
Okay, by the way, also, the point is that the NPA increases because of IL&FS exposure. Yeah. And, if you see in the past also, the market has actually liked if you have come out and come clean. The clear examples were IndusInd Bank, which the market didn't like, and of course Bandhan Bank, where the market actually liked it. So I think it's a bit of a cleanup. It could be a bit of a cleanup quarter. That's my sense. Looking at giving the new man perhaps a fresh guard. Exposure to IL&FS group is at 2,530 crores. I think that straight away translates into that gross NPA increment that
you Actually, Anuj, taking cue from you, the slippages from the IL&FS account is at 1,913 crores. So the overall gross slippage in the previous quarter was at 1,632 crores. This quarter, the total slippage is at 2,297 crores. So if you remove remove IL&FS, the slippage is massively down from 1,632 crores to about 384 crores only. So X of IL&FS, as Anuj you mentioned, the numbers are good.
Okay, and the provision coverage ratio stands at 44.2%. That's what we have. And the NPA ratio above 2%, largely because it seems to have been a clean-out quarter. By the way, the advance growth continues to be robust, 42%. I mean, that scorching pace of growth in the loan book continues unabated. Deposit growth is around 29% as well. So,
Surabhi, just to highlight, the decline trend of net interest margin has been arrested for 2 quarters in a row. Now, we were working, that there might be a decline in net interest margin given the fact that Yes Bank is a heavy player or big player in the capital markets, and we saw the volatility and the increase in interest rate in Q3. So they were working with a number of higher interest costs, but for 2 quarters in a row, after seeing a 6 to 7 quarters of net interest margin decline, the net interest margin for last 2 quarters has been arrested.
Okay, but the advances and deposit growth is quarter on quarter. Is it convincing, Abhishek? I mean, year on year, it would be good. If it was 41% last time, it would be 41% this time because we are comparing year on year. But one needs to see whether, quarter on quarter, Yes Bank has been able to maintain adequate deposit growth and therefore loan growth. But I think at the moment the market is still celebrating the fact that there is a new man and perhaps someone unconnected to the current management.
Unconnected, and I think we knew that. Of course, those two men. I mean, one was internal candidate, one was external. There was a debate that who that external candidate was. It was, of course, Navneet Gill, who of course hails from Deutsche Bank. I think we had his profile also going. The stock has recovered quite a bit from the low point. I think low was 189, now moving to 210. But obviously the big question now is, what next for Yes Bank? Right now what you're seeing is essentially short covering play out on the stock because there were a lot of shorts ahead of the results. But Lata, your thoughts on what next?
No,
for
I
the
see.
bank?
One really will have to see. Has there anything at all been mentioned here about the bank getting any annual inspection report from the Reserve Bank?
The bank is yet to receive the FY18 annual risk-based supervision report from the RBI. So they haven't heard from the Reserve Bank.
No, that will continue to remain an overhang.
Yeah.
And then for me, an overhang also is whether the new man will want to do kitchen sinking. This is not uncommon. You don't want to start with the previous man's legacy, and therefore would you want to clean up and even loans can always be somewhat doubtful, and you could arrange them the way you want. So it's possible that the new management wants to look at things differently. I think there could be an overhang. That could be an overhang on the stock. But whatever dip there will be, it will be bought because it will be seen as the start of a new beginning. That you will have to say. And the fact that, Abhishek was rattling out numbers. If you took out the IL&FS exposure, there is actually a fall in the...
I just want to repeat those numbers for the benefit of viewers who might not have those details. So the slippage on account of IL&FS is the massive 1900 crore figure, 1913. That has taken the total slippage for the quarter up to 2,297. And what Abhishek was saying, if you net off IL&FS, then you're looking at a much lower slippage number, which would be a quarter-on-quarter decline. So just going through it by that magnifying glass, perhaps it looks good. But again, the bigger question is whether IL&FS was the only problem in the closet, or whether there'll be more cleanup, more sort of kitchen sinking now that the new man is in, the new management is in. But 9% on the stock.
I think this is the power of positioning in the market. Stock has fallen from 400. What has changed? Nothing, right? It's just the announcement, the new name. That alone.
That is big, isn't it?
That is big. What I'm saying is, we knew Ravneet Gill's name is something which was doing the round for some time now. It's just that it's been made official
agree,
now.
But when it gets confirmed, I would like to think that. See, I always compare this to the way UTI Bank rose. I remember UTI Bank was in the shadows of the MS shoes, and trading had been suspended. This is what, 97 or 98, and then in comes PJ Naik, and even in front of your eyes you could see day after day the stock rising from some 18 rupees to 42 rupees. Pramod, were you around? Do you remember that time?
Not really. That was way before my time.
But Pramod, let me ask you this.
I'm revealing some secrets about my age here. But no, the point is a new management with no baggage, can be seen by the market very positively.
Absolutely.
And therefore, I think this is the Ravneet Gill impact.
No, absolutely. And I'll tell you something, at the end of the day, keep in mind, this is a stock which used to trade at 440, 450 at one point. And, over the last 10 years, perhaps has created more wealth, compounded than, say, even, some of the other private sector banks. So, yeah, there was a lot of pent-up sort of demand that, when things will, improve, or when, this issue will be out of the way, that there would be a lot of pent-up demand. But now, 11% move on the stock is just one-way move happening right now on the stock. Just a word on the earnings as well, because, the net interest income is 2,667 crore versus the pool of 2,500 crores. So, my sense is that, the market's also taking note of the earnings where, the gross the NPA is because of the Island FS exposure. But other than that, the earnings also looking good for at least for the quarter gone by. That, along with the fact that you have the new MD and CEO, a good name, is leading to this kind of move right now on the stock up 11%.
So, by the way, the previous time, before we talk about the 400 zones on Yes Bank, just a reminder that a couple of months ago, 230 is where Yes Bank kind of topped out and then it started falling again. Right now, 219 and it's climbing, and how? So,
the total. We have some experts.
Yeah, we have some more commentators to talk about Yes Bank. Anant Narayan and Lalitab Srivastava are with us. We also have Krishnan ASV. Krishnan, let me start with you first. Now, it's a roaring rally on the stock at the moment. First up, I mean, the numbers at first glance and the fact that the new man is in, do you think the worst is behind, the confusion is behind the stock?
Yeah, so thanks. I think three big uncertainties as we have been speaking of, and leadership succession was obviously the first among them. If that is in place, I think a lot of other things investors will probably look beyond, including the divergence number whenever that does crop up as well. And it also gives new currency to be able to go and raise growth capital, right? So that's something with very short supply right now with Yes Bank. That's a very critical raw material that Yes Bank will need to address in order to continue participating in market share gains.
Okay.
Right now, they are having to say no more often because growth capital is.
I just want to point out and read out another part of the press release, Anuj. The decisions taken by the board with regard to appointment of 2 additional directors, independent directors, and recommendation of an executive director will be detailed in a separate release. So I don't know whether there is any problem with the RBI approval for anything else. The bank only clearly states our bank has received RBI approval for its new MD and CEO, Ravneet Gill, and he's set to join on or before March 1st. That, of course, will be set separately. So that's important. We'll have to see whether other, approvals like recommendation of, I think, Rajat Moga to the board were also on the table. I don't remember. But I think we want Anant Narayan as well to speak about this. Anant, the elevation of Ravneet Gill, if I remember right, you all may have worked together at some point, right? Is this a good beginning for Yes Bank?
Well, yes, Lata, Ravneet, I did work with Ravneet during my Deutsche Bank days. Look, I'm not an equity analyst, so I won't talk about Yes Bank per se. But as a person, Ravneet is a sober, sensible banker. I've always known him as a very, very sane professional voice. And I think it's good news for Yes Bank that they've got a management of this caliber. Any bank going through any kind of ups and downs requires credibility and requires stability. I think Ravneet will bring both of this in ample measure. Very professional, thoroughly trustworthy, and he will be a kind of firm but stable hand at the helm of the ship. So all the best to Ravneet and all the best to Yes Bank.
Anand, so just to follow up, since you know Ravneet personally, you worked with him, from what you say, I'm just thinking that then we're looking at very different managerial styles as well. Mr. Rana Kapoor with his aggression going out there. I mean, the market paid premium for growth with asset quality that look reasonably stable. So does Ravneet have a very different approach, more prudent, slow and steady kind of an approach then? Because in the market will have to get used to perhaps a different, run rate with Yes Bank.
So we have to start by saying I don't know Rana Kapoor well enough. All I can say is I can vouch for Ravneet's professionalism, and he's been there for long in Deutsche Bank. He's an old hand, knows the markets, knows banking, and is I think comes with the highest credibility and professionalism. All this is I think, basic ingredients for a good banker. Yes Bank has been going through its shares of ups and downs and requires a steady ship right now, steady hand right now. I think Ravneet is best placed to provide that. I'm sure all the other candidates were good as well, but I'm just glad that Ravneet made it through. I think it's a great news for Yes Bank.
All right, thanks a lot, Anant. Well, I think Lalitab, we want your comment both on the numbers, on the asset quality, which has improved greatly, minus IL&FS, and of course the new man.
Yes. So on the numbers part, I think the numbers are fairly in line. The good thing is that the asset quality net of IL&FS has shown significant improvement on a QOQ basis, and definitely the overhang goes out in terms of uncertainty on the management part. So all these things I think are going to be looked at positively from the market's perspective.
Okay, we'll thank Anant on that note. We also have Ashwin Parikh and of course Anand Tandon also joining us. Ashwin, your first comments. Okay, Ashwin is not there with us. Anand Tandon is with us now. Anand, good afternoon. Your thoughts? Up 11% right now. A lot of this, of course, is positioning. The market was heavily short on Yes Bank, but what's the way forward now?
Well, I mean, obviously, the fact that there is a new management will make an effect as to where the bank goes. I am not sure of the career, track record of Mr. Gill, so I am unable to comment as to, what his experience is in running a large retail bank. Deutsche largely has corporate and institutional banking business in India. So, if he has the requisite experience, I would think that it is positive news for Yes Bank for sure. Okay, we have Mr. Tulsian also joining us back. Mr. Tulsian, thanks for coming back. You've always said that buy Yes Bank around 180. It's always a good buy. Today, of course, from 185 to 220 now on the stock. It's a 35 rupee intraday rally that you're seeing. Your thoughts on the announcement and way forward now?
See, Anuj, now people will only be talking about the new CEO coming in, Mr. Gill, and that will really keep the share price moving up. Because fortunately, we have seen the Q3 numbers also along with this news of Mr. Gill coming in as CEO and MD. So I don't think that there will be anything looking back from here on the negative sides. We may have our apprehensions that the divergence issue still remains alive for the bank, or there may not be aggression as we have been seeing in case of Rana Kapoor. But I don't think that those will really be having any negative effect. And that you are right. In fact, we have been saying that 180 looks to be the good support after having seen all this volatility, and we have been in fact saying that from 190, 192 when it has been ruling for last 3-4 days that you'll go for the buy, and even at the current level of 215 we won't hesitate in taking a buy call, because the next target which looks maybe on this news flows coming in is about 245, 250, because mind it that this was an under-owned stock. Even technically there was quite a lot of short sold positions, and the stock which has been accumulated at a level of about 190, 195 or 200 or sub 200 has done by the strong hands which they will not release the stock so quickly. Maybe if the profit booking has to come, it will come at 245, 250. So maybe after this news flow having come in, we next target take a call on the stock is at about 245, 250.
Just not stopping. We are down to the last 9 minutes of trade. We will be hearing from the Yes Bank management as well. By the way, keep an eye out on the rest of the screen as well. TCS and Reliance are also doing their bits, though of course they're not getting their share of the thunder today. It's all about this one bank. Prakash, so very quickly, your thoughts. Would you buy the stock now?
Adequate time to start building, though the base that's been formed. Yeah, can you hear me?
Yes.
I'm saying the kind of base that we've already seen, the base that we have seen being built closer to 200 levels.
Okay, Prakash, good enough. Prakash, sorry, hold on. We have Rajat Monga actually now addressing the press.
Okay, I think we're just waiting for Mr. Munga to fix that mic and get going, but it's been absolutely blowout. It's 14% now. 14%. And the numbers have also been, underlying numbers have been really good. You can't find fault with anything, Anuj, beyond, of course, the big headline announcement.
You know, when it rains, it pours. Let's put it that way. But, you know, this was the same stock. Remember when, you know, it was falling? And, you know, for all you know, you know, purely from a stock market point of view, Surbhi, I'm saying this, purely from the stock market point of view, you know, risk reward is what the market is respected. Anyway, here's Rajat Monga.
Conference for discussing the financial outcomes of the operating performance of the bank for the third quarter. I'll start with the key highlights. We are happy to report the resiliency of our earnings, represented by 41% year-on-year growth in our net interest income, totaling to 2,666 crores, which represents a robust sequential growth of 10.3% and is also contributing to a stable net interest margin performance at 3.3%. As a result, we are reporting a net profit after tax of 1,001.8 crore rupees, which is an increase of almost 4% sequentially, despite the bank having to take some accelerated provisions to the extent of a total of 550 crores, especially on account of one stressed infrastructure conglomerate, which contributed to about 571 crores of provisionings in this current quarter. The bank is also reporting an improvement in its capital position as well as the mix of advances from its retail business. So the CET1 capital ratio of the bank improved to 9.1% from 9% during the previous quarter. This is essentially on account of the rebalanced strategy of growth that the bank is adopting, given the very good growth that the bank has experienced in the last 18 months particularly. Overall, the capital adequacy ratio of the bank stood at 17.4%, and within which the Tier 1 capital adequacy ratio stood at 12%. The loan book, advances book of the bank grew at a rate of 42.2% on a year-on-year basis, and it now totals to little less than 2,44,000 crore rupees. This is a 1.8% sequential growth as compared to the last quarter. The composition of advances also moved in favor of retail banking, and it now adds up to 15% of the bank's total loan mix as compared to 11.8% at the same time last year. The bank is also reporting stable funding and an improving liquidity profile, constituted by deposits that grew 29.7% on a year-on-year basis and now total to a little less than 2,23,000 crores. Within deposits, the bank experienced a 37.2% growth in its retail deposits on a year-on-year basis and 3.7% on a quarter-on-quarter basis. Within corporate deposits, the bank experienced a 39.9% growth on a year-on-year basis and a 7.9% growth on a sequential basis. The CASA ratio was flat nearly at 33.3%, and the mix of CASA and retail deposits put together improved slightly to 57.5% as opposed to 57.2% in the previous quarter. The daily average liquidity coverage ratio for the bank improved to 102.3% from 99.4% as compared to the previous quarter. And as at close of the quarter on December 31st, the liquidity coverage ratio of the bank stood at 114.3%. The core asset quality trends of the bank also continue to be improving, other than for the infrastructure conglomerate that has been downgraded in this current quarter. As a consequence of which, the bank is reporting a gross NPA position of 2.1%, a net NPA position of 1.18%, entailing a provisioning coverage ratio of 44.2%. If we set aside the infrastructure conglomerate for a moment, the gross NPA position of the bank would have improved from the previous quarter and would have stood at 1.32% as compared to 1.6% in the previous quarter. Similarly, the net NPA position would have improved to 59 basis points from 84 basis points in the previous quarter. And the provisioning coverage ratio would have improved to 55.6% from 47.8% in the previous quarter as well. The bank has contained the credit cost for the current quarter as a result at 29 basis points. And for the 9 months for this financial year, the credit cost now adds up to 64 basis points. This is despite the 24 basis point contribution of credit cost that has come from the infrastructure conglomerate that I have been highlighting. In the quarter, the bank has made no sales to ARCs. In fact, the bank has received an aggregate redemption of close to 115 crores from its security receipts book. I will move on to some more highlights of the profit and loss account for this current quarter. The bank did experience a decline in non-interest income on account of the treasury line resulting from some mark-to-market valuations, as well as realization of some losses on from its investment book. As a result of which, the non-interest income has declined to has declined by 37% on a year-on-year basis. As I mentioned earlier, the bank is reporting a provision of 550 crores for this current quarter. I would like to give the breakdown of the provision. NPA provisions are accounting for 507.5 crores, out of which 478.3 crores are accounted for by the stressed infrastructure conglomerate that I've been highlighting. The bank has also taken 99.2 crores of standard asset provision, substantially on account of one part of the infrastructure conglomerate which remains standard. However, the bank has chosen to take a 15% preemptive provisioning on the part that still remains standard. There has been a 184.6 crore incremental provision on account of the existing security receipts book. There has also been write-back of provisions on account of investments to the extent of 205.8 crores and on account of other items to the extent of 35 crores. The return ratios of the bank stand as follows. The return on assets for the current quarter on an annualized basis is 1.1%, and the return on equity again on an annualized basis is 14.4%. The book value of the share of the bank stands at 122.8 rupees per share as on December 31st, 2008. Some more statistics on the balance sheet side. The total asset base of the bank has grown by 40.9% in this last 1 year, and it grew by 0.6% on the sequential comparison. The total asset base of the bank now stands at little less than 3,74,000 crores. I mentioned that the CASA ratio is steady at 33.3%, and within which current accounts have grown by 30.7% on a year-on-year basis, and the savings accounts have grown by 4.4% on a year-on-year basis. Loan book has grown by 42.2% on the year-on-year basis and 1.8% on a sequential quarter comparison basis. Within the loan book, the retail advances have grown by 82.9% on a year-on-year basis. In this quarter gone by, the retail contribution to growth was as much as 65% of incremental business that the bank has booked in the third quarter. One more statistic on the balance sheet side is regarding the risk-weighted assets of the bank. They now stand at 3,06,289 crores, which is a 82% share of the total assets. So when we compare our risk-weighted assets to total assets, the 82% mix has improved from last year same time when it was 84.3%. The asset quality position of the bank has some core improving trends. While I highlighted the fact that the bank has had to take a downgrade on account of a large infrastructure conglomerate, the gross NPA position of the bank now stands at 5,159 crores, of which 1,913 crores were added in this current quarter, predominantly on account of the infrastructure conglomerate, and another 325 crores on account of the core slippages from the bank's asset book. Similarly, the net NPAs now stand at 2,876 crores, which are again contributed mostly by the infrastructure conglomerate, and that value would be about 1,435 crores. When we look at our total stressed assets book, which will include not just net NPAs but restructured assets as well as some constituency from the security receipts, the total position of the stressed assets of the bank is at 1.98%. If I exclude the infrastructure conglomerate, that ratio would stand at 1.39%. This would be an improvement from the last year position where it was at 2.41%. Within the infrastructure conglomerate, we have downgraded the position on account of our exposure to the roads and the energy vertical, which totals to 1,913 crores, on which the bank has provided 25% in this current quarter. About 617 crores of exposure to the group continues to be standard, against which the bank has taken a 15% standard asset provisioning in this current quarter. Having done this, the bank now believes that the aggregate provisioning, which is made on both the operating as well as the subsidiary companies' exposures in this particular group, are quite adequate and within the expected realizations. This outlook on asset quality continues to be stable. We are reiterating that the impact on account of NCLT proceedings on the bank's asset quality continues to be minimal. In the first list of NCLT, the bank's position stands at only 0.1%, and out of the second list, the bank is holding about 26 basis points of its loan book, which are very, very modest in terms of its position on an overall basis. The bank is also reporting a modest position on its SMA2 status of its loan book, where the loan exposures are overdue by more than 60 days. That position is 19 basis points for the total loan book. There are other statistics which we have added in this particular presentation, which include the bank's exposure to HFCs, which now stands at 3.4%, to NBFCs, which stands at 3%. 96% of the HFC exposure of the bank is rated AA or better. Similarly, 91% of the bank's exposure to NBFCs is also rated A or better. If I look at the large exposures of the bank, and among the top 20 exposures, more than 90% of the bank's exposures there also stand to benefit from external rating being A or better. You may also have the question on the RBI's report that the bank is yet to receive, so I will not be able to offer any comments on that. We've also added the bank's position on other sensitive sectors, which include the electricity non-renewable generation, where the bank's position stands at 2.1% of its total loan book. We have seen reductions in iron and steel, telecom, as well as gems and jewelry, which are there in our presentation for you to take note. The overall corporate portfolio of the bank continues to be well rated, and 75% of the portfolio would qualify to be rated as A or better. I will also now move to some highlights on account of the digital banking and initiatives that the bank has been executing. There is a reasonable amount of domination that the bank has exerted on the payments landscape. The bank continues to have the highest market share of the UPI merchant payments at 30% of the industry, and the bank processed 36 crore transactions amounting to 65,000 crores in the quarter gone by. The bank also is the top remitter bank in the IMPS category within the peer group, with 72% year-on-year growth that the bank experienced under the IMPS category. The bank is also one of the leading acquiring banks in the AEPS category, which processed 4.5 crore transactions across almost 3 lakh business correspondents, which have been enabled for this processing. The bank is experiencing that the mobile as a channel continues to grow and well, and is becoming more and more the consumer's preference. So we have seen a 1.75x jump in mobile banking registrations, a 2.3 times jump in transaction value, and a 1.75% jump on transaction volumes as well as compared to last year. Debit cards as a channel also continues to benefit from digitization, where the bank experienced a 46% year-on-year growth in transactions and a 50% year-on-year growth in values transacted on debit cards. The bank also launched a peculiar initiative for allowing customers to book FDs and recurring deposits through its Yes Robot platform. That platform also has witnessed 1 million transactions in the third quarter itself. This was an industry first offering that the bank was happy to introduce for the convenience of its customers. The bank also launched a complete straight-through end-to-end acceptance of NACH debit mandates for corporate customers, which has reduced the turnaround time from 15 days to a matter of seconds or a near real-time basis as far as the registration of NACH mandates is concerned. The bank also launched an industry-first Yes SME digital banking solution for the Indian SME clientele, which won the Silver Award at the IFC Washington's Global SME Finance program in the category of product innovation. And we are happy to report that we were the only Indian bank to be honored among the 100 plus international institutes that received awards at this function. And the bank is also working to help digitize the G2C payments, the government to consumer payments, where a cashless solution has been initiated in Puducherry Smart City, which has enabled digital payments for citizens and visiting tourists. It also received the mandate to now implement Bharat QR solution in the Puducherry Smart City. The bank is also adopting 2,000 villages to empower about 1 lakh lives there under the Yes Digi Villages program. And this will leverage the SIM-Se-Pay technology as well as the India Stack to introduce instant and paperless banking for the rural customers.
Paperless banking, helping unbanked villages, all of that is very good. What's also very good is a stellar show that Yes Bank has put together. Final rates as per the close, almost a 10% rally. What a move the stock has had.